Hey fellow traders, I want to talk to you about investing. I want to talk to you about, if you're a beginner, what's a really great idea for investing. Because if you want to make money in the future, if you're a young chap and you just started out working, believe me guys, rather than day trading, and this, I shouldn't even be telling you this, but rather than day trading, just do a little bit of investing. And I'm going to show you how to do that in this video. I'm also going to show you my trading system, or a trading system that will help you if you want to day trade or if you want to trade on a much quicker basis. Because investing can make you so much money if you're that much younger. And you don't even have to be that young. If you get to an older age, you can still do this. So what I would recommend is, if you're very young, take a small amount of $250 a month, put it into investing, and just keep on paying it in. I guarantee you within 10 years you'll have $1 million, and then within 30, 40 years you'll be so glad that you did it. Choose 10 shares, work on those 10 shares, and that'll make you a whole load of money. Guys, trading is risky. Day trading is very risky. It's a 50-50 game. 50% of the time you're going to make money. 50% of the time you're going to lose money when you take a trade. So bear in mind, trading is risky. 80% of traders lose money. If you don't like risk, don't trade. Stay away from trading. But on the flip side, go and check out my secret blog every day, a free trade. It's in the description below. It's just an idea. It's not trading advice. Go and enjoy it. It's on the blog. And also, while you're there, pick up your free Forex book. There's a free Forex book. It's in the index. It's in the side. It's in the bottom. And it's for you. It's free. Enjoy it. Here's my trading system, and then we'll get to do what's investing for beginners. Most probably the simplest trading system you've ever seen. Today, I'm just looking at supply and demand. I know we always trade support and resistance, but today I'm looking at the supply and demand on this particular trade, and I'm also looking at the trend line, and we'll show you the support and resistance. I'm also going to show you how to place your stop loss on a trade like this. Now this is the France 40, and on the France 40 there's definitely a long trade coming into play here. We're on the 4-hour chart at the moment, and as you know, we always look to go a little bit up on the time frame, so we're going to go up to the day chart. Now look at the trend in this day chart. There's a huge uptrend here. Now you can look for the lowest prices on the days, but what we're going to do is we're going to go to the line chart and we're going to take the closing prices. Now while I could take a trend line from the bottom here and go all the way up, which is a very nice trend, it's not bad at all. I mean, you can use this trend. I would actually prefer at the moment just to take the trend line from here, because that's a much steeper trend and it's probably going to work better on the shorter time frame. You can also take another trend line from the upside and just put it along there, and you're in a nice trend. Now, while I understand that, while I've told you that all the trend lines and support and resistances should end up on at least 3 good points, this one's only on 2. You can clearly see that there was a third time that this was going to come down, and I expect there will most likely be a third time that this comes down and connects with our support line. So I'm not too concerned about that. Also on the upside, on the resistance, we've got 1, 2, almost 3. I'm very happy with this trend. You see, you've got to not stick to rigid rules. Sometimes you've just got to have that feeling in your bones. And this looks like a really strong trend to the upside, and it looks like it is creating a channel. And I have to say that in my bones it tells me that's pretty good. Now if you were going to look at support, you would draw your support in around that area there, and then you would have quite a good support area. But the reason I'm looking at demand today is I'm going to show you why. We're going to put this back to the bar chart, and clearly, even on the day chart, you can clearly see that there's a good demand area here. I'm going to take this back to the 4-hour chart so that you can see, there's your 4-hour chart, so that you can see your support area. Look at that lovely support area coming through here. So if this was to come down all the way to the support area, it would come down to there and then probably bounce back up. But we're not looking at the support area today. We're going to look at demand. So let's take it back to the higher time frame being the day. Let's just make it adjusted so that we can actually use it. I'm gonna take this out for now. We'll put it back in a moment so I can show you something. And let's just make it a little bit bigger, and you can clearly see a nice demand area over here. Now, what is a demand area? A demand area is where all the orders are lying, and you can see that by just looking. If you see, there was a red day over there, little red day. It was the last red day on the way up, and then you got 1, 2, 3 good big green moves, and another and another. There is a pincer top at the moment, but all that depicts is a bit of a correction, and it'll probably come back down into this demand area. And that's what we want. We want it to come back down into the demand area and then bounce out of the demand area all the way back up to there, giving us a really good long trade. Now, the nice thing about this particular type of trade is you've got a trend line, a trend support line running up straight through here. Then you've got your demand going across exactly the same area. So you've got a lot of confluence in this area. And also, if it breaks the demand area, it's basically going to break into the support area here. The only downside to this is your stop loss is going to have to be lower, simply because you can't put your stop loss inside the support area, because it's still a good trade if it comes down into that and you can still go long. But this is not a problem if you look at the size of this trade, because okay, I'm going to put this in on the day and then we'll go back to the 4 hour. But if you were to put your trade in on the day, look how much room you've got for profit up here, up to the top resistance line. So now you can take your stop loss below the support area. And why don't you want to put it in the support area? Why don't you want a tight stop loss? Well, it's simple. If you put a tight stop loss in here, when it comes into it, all the stop losses are going to be sitting here, and it's going to find your stop loss, because that's where all the other stop losses are. So you just join the crowd. Not only that, you are also sitting with a situation where your trade is still valid because it's coming into a support area and it can still go long. Be very careful of that. So take your stop loss and put it a little bit lower. You can either put it in the middle of this long green candle below it, so that it's just away from there, or you can even put it a little bit lower if you want to, just to be on the safe side. But that's a pretty good area. Now, if I take this back to the 4 hour where you want to trade, or the 1 hour, but we'll just do it on the 4 hour. It's easier to see. Now you can see your big trade, your massive trade. Now this is a lot clearer. It's going to come down into the demand area, probably bounce out, give you a green bar and go back up. If it doesn't, if it breaks the demand area, then what it will do is it will come past the demand area, probably head down here to the support level, and on the support level, it can then bounce out. Don't worry if that happens to this with this demand area, because this becomes completely null and void if it breaks through it, simply because it's only a demand area. It's not a resistance. Your resistance is up here in this area here, and that'll be your first target, and your second target will be up there. So if it was to break through here, your targets would end up around this area, and then obviously your second target being your main trend line at the top. Quite easy. And your stop loss remains in its position. So you've effectively got 2 chances of a trade here, and your invalidation is only when it's down at the bottom here, not when it's over here. It's not invalid if it's over here, because you've got a second trade sitting just below it. It just depends how much money or how many stop losses or how many stop orders are sitting in this demand area, which is going to cause it to bounce back up. You see, guys, you don't need anything complicated. You don't need ICT. You don't need all these BS systems and rules. You just need a simple system. And in such a simple system, look at it. You've effectively got 2 chances for a trade, plus you've got confluence of a trend line. And I can almost guarantee you, if I put Fibonacci in here, you're probably going to get confluence as well. In fact, shall we try that? Just for interest's sake, shall we see what Fibonacci looks like here? It's going to be interesting to draw the line. I'll tell you what, let's take it to the day so that I can draw this thing in, because it's all the same at the end of the day. Just make it easier to draw. Now let's just have a look. I think that's Fibonacci. Let's have a look. Oh no, this is some kind of curve. Sorry, I got the wrong one here. Where's the Fibonacci, man? Hey, let's have a look. Fibonacci retracement. Right. Let's draw that in and see what we get. And that one, there's confluence at the 0.382 level. Yeah, not bad, not bad, not bad at all. What if we draw it in from the bottom, like we're supposed to? Yeah, it's a little bit out. So yeah, maybe Fibonacci is not giving you a great confluence, but yeah, okay, it's there though. The 0.382, it's there. There is confluence. You can use it if you want to. Take it back to the 4-hour chart, and that's your trade. So yeah, that's how we trade. We keep it simple, we don't get overcomplicated, and you look for confluences wherever you can find them. So that gives you an idea of how to day trade. But that's a sort of day trading with supply and demand and a little bit of trend. Generally, my main system is the support and resistance. So if you go down to my other videos and you have a look there, you'll find the support and resistance trading systems as well. And it shows you very nicely how you can manage your risk. But day trading is very much all about managing your risk, because that's the most important part. Now, if you were to invest, if you take a few calculators online, and you can take, say, $250 a month and put it towards a number of trades, what I would do is I would choose, say, 5 to 10 companies, maybe over time 10, maybe in the beginning 2 or 3, then 5, then 7, then 10, and pay that money into those companies on a monthly basis. That will bring you a little bit of sort of peacefulness to your investing. So when you're investing, you know that you don't have to look, you don't have to worry about it, you don't have to do anything. In fact, you could take that $250 a month and pay it into the S&P 500 in the USA, and you'd probably have a similar result. But the reason I say pay it into companies, if you choose, say, 10 companies overall in the long run, and if you can put an initial amount down, that would be great. So say you've got $10,000 lying around, and you can put $1,000 into each company to start with. That'll be great. Choose companies that pay dividends. Choose companies that have a dividend payout quarterly, annually, half yearly, whatever the case, because those dividends will often bring you sort of 4 to 10% depending on the company. Some companies pay really well, on average about 6%. So every year you're getting that money back in your pocket just on dividends alone, and you can decide whether to take that dosh and put it back into the investment, or if you want to keep it as an income. Now you think about this. In 20 years, when you've got a couple of $1,000,000 lying in that account, and every year is giving you 6% back, it's not bad. It's not bad, and that can go back into the investment, or you can put it in your pocket depending on your age. So you could literally start this when you're 50. You could start this when you're 40. When you're 70, it's a bit late. When you're 60, even then, you could still get 10 years out of it, but then by the time you get your investment back, man, you're already 70. So I would recommend you start this when you're much younger, and if you can, when you're 20, but when you're 30, when you're 40, still good. Take a little bit aside every single month, just put it away and make a little bit of extra dosh. You'll be so happy that you did that. Day trading it, it's gonna come, it's gonna go, it's gonna come, it's gonna go. And like I say, one of the better things is not to trade too much. Don't overtrade it. So if the trade's not good, don't take it. Only take the really good trades when you're trading as well. You know, people tend to trade too much because they're bored. They put too much into their trading, and they end up losing because of that. Rather take it easy, rather take it slowly, and rather trade less, better trades, more comfortable trades. And it's a bit like investing. Then you know you've got a decent trade there. That's the basis of this whole thing. So what I recommend, if you're really young, just do the investing for now. Get used to the markets, put the money away, and whatever you do, don't take it out. Just keep on putting it in. Leave it there. Hopefully you never have to take it out, because 10, 20, 30 years down the line, you're going to be so glad I gave you that advice. I don't give advice. I don't give financial advice. It's only an idea. It's only from me to you, a little bit of what I've learned over time. So guys, I hope that video helps you. I hope that gives you some insight. Thanks for watching. Till next time, don't forget to watch the last video. Bye.